Awesome, perfect. So on the call that we're going to be doing tonight, I'm going to explain some basics. So everybody is going to be on the same page, okay? Some of you already saw the information when you got launched. Some of you never got launched. I see that Ego is on the phone, on the call. So you never got launched yet. So what I'm going to do is going to break down the basics once again, so everybody know what to do and how to do it. All right. Really straight up basics. So get a pen and a paper out, and you know, if you know the information, just write it down, not for yourself, but to teach others. Oh, okay. Good. All right, perfect. So I'm gonna go ahead and share my screen. Everybody's ready? Type 111 if you're all ready with pen and paper and ready to take notes. If you're new, if you have any question, just write them down in the chat and Alina will help me answer the question if I don't see them. Stay on the call until the end, because I'm gonna break down the basics, but Alina will go deeper into, you know, risk management, okay?
I'm gonna make you the host so you can share your screen.
Yeah.
Is it on the iPhone?
No, the one that you see my picture. I mean the video on.
Hold on a second. Which one?
The one that I have the video on.
You got two.
Yeah, the one is without video. The other one is with the video on.
So you went with the video.
Yes, with the one with the video.
Got it.
All right, guys. So I'm gonna go share my screen. And if you know the information, write them down to teach them. All right, everybody should be able to see my screen. All right, perfect. So welcome to the basics. All right, so in the Forex market, as you guys know, mostly in this company, we trade 8 major currencies, okay? So which one are the 8 major currencies? And I'm sorry about my handwriting, but hey, as long as you guys understand, it doesn't matter. So the first one is the EUR, which is the euro, okay? Write down the translation next to it. Then we have the USD, okay? US dollar. Then we have the CAD, which is the Canadian dollar. Then we have the NZD, which is the New Zealand dollar. Then we have the AUD, which is the Australian dollar. Okay. Then we have the GBP, which is the Great Britain pound. Then we have the CHF, which is the Swiss franc. Then we have the JPY, which is the Japanese yen. I'm gonna repeat it one more time, so everybody that is new is going to be able to write it down, okay? EUR stands for euro. USD stands for US dollar. CAD stands for Canadian dollar. NZD stands for New Zealand dollar. AUD stands for Australian dollar. GBP, Great Britain pound. Then CHF stands for Swiss franc. Then JPY stands for Japanese yen. Okay. Also,
you let people in the call, please.
How do I do this? Hold
Check
on.
the participant, and then you see.
All right. Let me know if there is somebody that wants to be on. Okay.
Yes, ma'am.
Dale. Awesome. So also we trade cryptocurrency. There is thousands of cryptocurrency in the world, but the main ones that we trade is Bitcoin, which is BTC equals Bitcoin. Then we trade XRP, which is Ripple. We also trade gold, which is XAU, which is gold. We also trade indices, which we trade US 30 mostly. Okay. We trade NAS 100. Alina, I feel that I'm launching you back to basics. Okay. Then we have SPX 500. Write down a side note that you're going to be using in the future. If you don't understand what I write down right now, what I'm about to write down, do not worry. Just keep it for yourself. And then you will understand in the next page. Okay? So here is 0.01 for every $100 in your account. Okay, don't worry if you do not understand, just write it down. Here, I suggest that you do how you want it, but I suggest 0.02 for every $100. XAU, for new people, I only suggest 0.02 at all time. It doesn't matter how much you have in your account. And I do not suggest to trade this if you're new just yet. But if you're not new, I suggest 0.01 for every $1,000 in your account, which you will understand what I mean by this in a little bit. All right, so moving forward, in the Forex market, you always trade one currency against another one, okay? So you always have one pair, which I'm gonna put XXX, whatever pair you want, against XXX. The first one is called the base. The second one is called the quote. The base is the one that determines how the graph is looking like. So if the base is stronger than the quote, we see the graph going up. If the base is weaker than the quote, we see the graph going down. Okay? So in the Forex market, you only have two, hold on, guys, can you mute the mics? Oh, we have Tracy on.
Isa, your meal.
Okay, can you guys hear me?
Yes.
Okay, so in the Forex market, a lot of people come in, there are news like, hey, Isa, how do I buy euros? Where do I go buy Swiss franc, or where do I buy gold? No, so here we're not buying or selling any currencies. Buying and selling is just a prediction of where the market is going to go. So if you buy, you're not buying anything. Write this down. I'm not gonna write it down. It's just a prediction that the market will go up from my current market price. Okay, so if I buy at a certain price and the market goes up, I am making money. But if I buy and the market goes down, it means that I predicted wrong. So I'm losing money. Oh no, sorry, my cats are fighting. Run. Okay, the second prediction that you have in the market is selling, so sell. Here, you're not selling absolutely anything. You're just predicting that the market from a certain point will go down. So if you're selling and you're predicting right and the market goes down, then you are making money. Hold on, my cats are fighting.
Drop a 111 if you guys are understanding so far. Let me see the chat. Perfect. Tracy's understanding. And then by the end of the call, if we need to do like a Q&A, we go ahead and do that because we want to make sure everything is clear and we can start the week very, very like on point. Okay. So I think,
exactly.
Is the cats okay? Are the cats good?
Yes, I just let one out and let one in. So they're not fighting. It looks like that every time I'm doing Zoom calls, they're just start fighting somehow. But okay. All right. So yes, everybody should be understanding. I'm breaking everything down the easiest way possible that a kid can understand, because, you know, Forex sometimes can be difficult. There is a lot of things to learn. But if you stick to the basics, that's all you need. Do not overcomplicate what is already complicated. Okay? So let's go back to what we were saying. All right, so if I sell and I predict it right and the market goes down, I am making money. Okay, but if I sell at a certain point in the market and the market starts going up, then I'm losing money. All right, so you guys are not buying and selling anything. You're just predicting where the market is going to go. Understood? Understood. Awesome. So moving forward, how do you make money in the market? You know that already, that you make money if the market goes up. If you if you buy and the market goes up, you're making money. If you sell, the market goes down, you're making money. But how do you make money? All right, so let me give you a visual representation of the market, not with candlesticks. Okay, so if the market moves, which moves ups and down, every time the market moves, whether it's up or whether it's down, it moves in little units. Always. It's always moving in little units. Those little units are called pip. Okay? Which is point in percentage, percentage in point, as you want to call it. You don't really need the translation. Just know that the market, every time it moves up or down, it moves in little units called pips. Okay? So let's say that you are down here, okay, where this little man is, like little muñeco is, and you're buying the market right here, and the market goes up. And let's say that the market goes up 10 pips. How much money did you make? Well, we're gonna give a name and a number, a dollar sign to each pip to understand how much money you made. How do we gonna give the name to the little pips? We are using the lot size. The lot size is just mean how much is each pip worth, and how much, obviously, I'm willing to invest and risk in the market, okay? The minimum risk, the minimum lot that you can use in the market is called 0.01, which means, translated in English, 10 cents per pip. This is the minimum. Okay, so it's not 1 cent, it's not 20 cents, it's not, it's not 2 cents or whatever it is. It's 10 cents minimum in the market. Okay, so I'm gonna ask you a question to you guys. If I invested 0.01, which means 10 cents per pip, and you're down here and you caught in the market 10 pips, how much did you make in this trade? You caught 10 pips, each pip is 10 cents. How much did you make? Let's see the chat. Can somebody answer? $1. Perfect. $1. Here you go. I see 17 of you on the call. I should see 17 $1. $1. I see Camila that is joining. All right, perfect. $1. Let me share back again. All right, so this is the cents place, meaning that if I invest 0.01 equals 10 cents. 0.02 equals 20 cents per pip, not 2 cents, 20 cents per pip. 0.03, 30 cents per pip. 0.04, 40, 0.05, 50, 0.06, 60, and so on and so forth. Then moving forward, we go to the single dollar place. So 0.10 equal $1 per pip. Okay, question to you guys. You're in the same position right here. You bought the market right here. The market went up 10 pips. Now you have a lot size of 0.10, meaning that each pip is $1. You caught 10 pips. How much money did you make? Let me see in the chat. 10, 10, 10, obvious. Perfect. You guys are killing it. Good job. Awesome. So this is the single dollar place. So 0.10 is $1, 0.20 is $2, 0.30, $3, 0.40, $4, and so on and so forth. Okay, then the last one is the double digit, okay, place, which is 1.00, which equals $10 per pip. Alrighty? So, question to you guys. Now, I am in the same position. I bought the market went up, 10 pips. Now each pip is worth $10. How much did you make? Let's see in the chat. 100. Awesome. Perfect. All right, guys, you guys understood? So this is the double digits. So 1.00 is 10, 2.00 is 20, 3.00 is 30, 4.00 is 40, and so on and so forth. Okay, so awesome. So, but where do we see the pip in the market? All right, let me open Trading View for you guys so you can see where you can find the pip. Oops, I misspelled it. Okay, everybody should have this, whether it's on your phone, whether it's on your computer. Open a free account. You do not need to pay for this. Okay, this is where, once you are a little bit more, intermediate, advanced, you will analyze your graph. Okay, so let's open Euro USD, for example, as soon as my internet wants to cooperate. Type 111 if you're following in the meantime. It's really simple, guys. It's really, really simple. All right, perfect. Everybody's understanding. Come on, internet. Here we go. I should have opened this before. I apologize for this. All right, perfect. So do you guys see the graph? Obviously, the graph is not moving as I draw it, like in a straight line. The market moves in candlestick. Within this candlestick, you will find the price and also, obviously, the pips. Okay, so the current market price is right here. Do you guys see the last candlestick, the last candlestick? At the bottom of the last candlestick, there is a dotted black line. And in the black rectangle right here, we see 1.12162. So everybody write it down in your paper. I'm gonna write it down to 1.12162, and we're gonna write it down. So I will teach you where you're gonna find your pip. All right, it's really simple, guys. Stick to the basics always. That's all you need. And after this, we're gonna do an example how you're gonna copy and paste and calculate your risk. So everybody should not be blowing account, should not lose more than they're supposed to, should not come to me, oh, I lost 50% of my account in one trade. No, that is not supposed to happen, okay? So the current market price is 1.12. And obviously in the graph before, you don't see it moving because the market is closed. 1.1216. All right, this is my current market price. Okay, current market price. So where is my pip? How do I make money in the Forex market? So the first thing that you're gonna do is delete the last number. This is called the micro pip. We are not gonna use it. It's insignificant for us. Okay, our pip is the fourth number after the point. So in this case, is the number 6. So if the market goes from 12.16 to 12.17, okay, I'm just gonna write down the last two, 17. I just moved up 1 pip. From 12.17 to 12.18, another pip, then 19, another pip, 9 and 20.
Is that how to get in the call? I'm sorry.
Okay, hold on. Thank you, Aline. I know that it's Aline, but I like Aline. Okay. Okay. Share. Okay, and then we go to 20. Come on, it's not making me write it down. All right, 20, you got it. And then from if the market goes from 12.16 to 12.15, we moved down 1 pip, and then to 14, 13, 12, so on and so forth. Okay, so let's say that I am buying at this current market price. okay, at this market price. And let's say that my lot size is 0.10, which is $1 per pip, just to make you guys, you know, the calculation easy. If I buy and the market goes from 12.16 to 12.17, I just made $1 plus 1. From 17 to 18, another $1 plus 1. 18 to 19, another $1 plus 1. But let's say that I buy and the market, instead of going up, goes down. Then when it goes from 16 to 15, I am losing $1. 15 to 14, minus 1 again. 14 to 13, minus 1 again. Okay? So let's do a different scenario. Let's say that now I sell at that market price, okay? And let's say that still my lot size is 0.10. What do I mean? Where do I want, guys in the chat, where do I want the market to go if I sell? Up or down? Right in the chat. Where do I want the market to go? Down. Here you go, Tracy. Good job. Down, Marisa. Good job. Tatiana, Clara. Awesome. I see you guys are paying attention. All right, perfect. So if I sell at that current market price and the market starts going down, I am making $1 plus 1, plus 1, plus 1, plus 1. But if I sell and the market starts going up, then obviously I'm in negative, minus 1, minus 1, minus 1. All right, all good? Those are the basics. Okay, really easy to understand. Do not overcomplicate it. That's it. Okay, so let's do an example. Let's say that you guys receive a signal, and I'm gonna teach you. I'm gonna do one example, and then I'm gonna leave the word to Aline. All right, everybody write down this example, so you're gonna keep it in your records. So if you have any question, or if you do not remember anymore how to calculate, you know, your possible loss and the pips and so on and so forth, there you have it. So let's say that you receive a signal that says EUR USD buy. Okay, and it says that the entry point is 1.1323. Okay, then it says that the stop loss is 1.1272. And then your take profit is 1.1337.1. Actually, it's an old trade that we received this week in the Retired Young Signals chat. Okay. The first thing that you do whenever you receive the signal and you do not know how much you're possibly losing, you need to calculate how many pips you're possibly losing. So step number 1, you need to calculate possible loss. Always do not enter any trade blindly. Oh yeah, they sent it, it must be in the right direction. I'm gonna just put 0.50 and let's leave it to God and let's say what happens. No, you always, the step number 1, as soon as you receive a signal, you want to calculate your possible loss. Always, non-negotiable, okay? So how do you do it? It's really simple. So how to calculate your possible loss is your entry point minus your stop loss equals your number of pips you're possibly losing. Okay, so how do we do the calculation? As we told you prior, we always cancel the last number. We're gonna do the calculation just with the 4 number after the point. So it's 1320 minus this 1270 equals, can somebody give me the answer? I'm not good in math. Give me the answer. How much is it? Which is the magic number? 50. Here you go, Danny. 50, Marisa. Awesome. All right, 50. So this is the amount of pips that I'm possibly losing. You can also calculate the possible win, which is the same thing, but you're going to do the entry point minus the take profit, and you get the possible win. But I don't care about your possible win. Why? Because if you win a trade, everybody's happy, you're making money, whether it's $1, $100, or 1,000, it doesn't matter. But what controls your emotions is your possible loss. And it's a non-negotiable. You should always calculate your possible loss. Okay, and that's why I'm putting this like to your attention, because I receive it, oh my God, I blow my account. How? If per trade, we only risk 2 to 3% per position. Okay, perfect. So how do I risk 2 to 3%? The first thing, okay, I got it. I calculate my possible loss, 50 pips. Now, which lot size am I gonna use? So step number 2, you're gonna put the information that you got on this application that is called STINU. Okay, STINU. And in the application, you're gonna find a place where you're gonna put your account balance. Okay, account balance. You're gonna find the risk. What are you gonna put in the risk? 2 or 3%. And then it's gonna ask you how many pips is your stop loss, which we just found it right here. So stop loss in pips. Okay, you're gonna put in the information and you're gonna find out what is your risk and your lot size. So using this lot size with your account balance, it's the maximum risk that you're gonna take for that trade. So let's say that in the application comes out, oh, for this trade, I'm risking $10. Am I okay with the possible loss? Can I put in the trade into my MetaTrader 4 and copy and paste everything? Yes or no? If the risk is too high, then you would risk 2% or 1%. Okay? So this last step to do, to copy and paste your signals that you receive with a light heart. You know, you don't want to be scared of entering position, because everything that you think, everything that you feel will reflect in your trading account. So the third step is to execute. So by doing this, every time you receive a signal, if the stop loss is not given to you, sometimes next to the trade, they're going to give you -50. Okay, so these are the possible pips that you may be losing. Okay, by doing this, you are not going to babysit the trade. You entered the trade acknowledging what is your possible loss. So you know exactly how much you can possibly lose. So you're not always on the top of your phone like, oh my God, and what if I lose the trade? Oh my God, and what if I lose the trade? Oh my God, what if it's red, it's blue, it's red, it's blue, it's red, it's blue, I don't know what to do. You should not be thinking that way if you know exactly how much you're risking. Okay? There is different ways to calculate pips. Every pair, regular pair in Forex is calculated this way, with one exception for the JPY pairs, okay, which I'm gonna direct you back to the academy to learn that. You're gonna calculate pips in a different way for cryptocurrency, and you're gonna calculate different pips, like different way on gold. And I'm gonna direct you back to the academy. All right, with that being said, I hope you guys all understood. Oh, Brendan is on here. I want to give it back. I want to give the spotlight to my best friend, the 7-figure trader, next Go Live educator, Aline. I met this girl back in, I believe, 2016, 15, something like that. We used to work together in direct sales. She was training me. She was my, trainer, supervisor, as you want to say. And, life just put us in contact. Life wanted us to be working together. So thank you, Aline, for your loyalty. Thank you, Aline, for your friendship. I love you. So take it over.
Thank you, Isa. I love you because you showed me this platform and it literally changed my life, changed my whole family's lives. And if you guys see this, this is what I gotta deal with. So I'll tell you, if you can learn about distraction, I'm learning about all this every day. Y'all can learn it too. So what I'm trying to say in this call is Isabel was talking to me about hey, we gotta put some value, and then tell, like, kind of like make people understand how can you build a consistency when you're trading, right? I believe everybody understand that, oh, I gotta understand my risk to be able to jump on the market, right? Uh, okay, let me just, okay, perfect. Y'all can see me, right? Okay, so I see people writing on the chat saying, "Oh, I'm okay losing $50. I'm okay losing half of my account. This is just a practice account." I get everybody has different views of risk management, right? But I'll tell you, if you have a small account and you lose half of your account, that's not building consistency. That's actually building a mental block on your own self. Okay. So don't be me when I started, because I had my accounts like, this is just a practice. I can lose money. I'm not depending on this money. Right. So I used to risk almost half of my account in one trade. It was dumb. Right. Because, yeah, don't say that. Okay. So it was basically like, you got to understand where to start. So that's why we call this whole training 0.01 mentality, right? So I'm going to break it down for you that if you have a small account, let's say $100, right? And you have a bigger account, let's say $1,000, you cannot build the $100 account. Guess what you're going to do on the $1,000 account? The same thing. Consistency, it doesn't matter how much money you get in one trade. Consistency is, oh, hold on a second. So consistency, it's basically how often you can make profit within like trading every single time you enter the market, right? So I know majority of you guys are taking signals on the chat. Great, I am too. But how many times you jump on the signal? Hold on, let me see. I'm gonna mute you, okay? Okay.
Already did, sorry.
Okay. So how many times, let's say this week or past week, you enter a trade, you're in profits, let's say 10 pips, and that thing went negative, hit your stop loss. Type of 111 in the chat. All the time that happens, right? Oh, but they wrote down on the signal chat that the take profit could go 30, 40 pips, right? So I was waiting to go all the way to 40 pips, but I didn't actually thought about it, moving my stop loss into profits, making it risk free. But Aline, why I'm gonna move my stop loss into profits if it's only 15 pips in profit? Would you rather lose $0 or would you rather lose $30? Right? I don't like losing. And there's no such a thing of winning trade. Oh, you only gonna post winning trades. That doesn't exist. You being a trader, you don't know what's gonna be the outcome. That's why it's so important to understand risk management. But the risk management ain't just like placing the lot size. It's when you're gonna get out of the market, how long you're gonna stay in the market, right? How many of you guys went to sleep on the profit trade, woke up with the negative trade, right? Because you just thought, oh, I'm good. It's only 5 pips away, gonna hit a stop. Take profit. I can go to sleep, and that thing just turned and be like, wow, I just woke up and I took a nap. That thing is just red. It's almost hitting my stop loss. So I've been preaching this every single time we talk about risk management. Write it down, what's your goal? And if you're new, don't be shy. When I was new, I didn't know what was my pip goal for each trade, right? So just write it down, get a piece of paper. If you're new, I would recommend to have 15 pips as a goal. That's it. Every single trade. Why? Because we basically trade 2 or 3 sessions, right? We trade Tokyo, we trade London and we trade New York, right? So normally we're getting signals through all these sessions right now. And then if I go back on the chat, we're gonna see multiple trades, right? So if you see TP1 as a 30 pips, great, put it 30 pips in your MT4, but put an alarm on your trading view for 15, right? Because you gotta be like, but 15 so small on a small account. Yeah, on a small account, you not try to look at the dollar amount. You try to look at the consistency that you can build on the smaller account so you can do exactly the same thing on the bigger account, right? The difference ain't the dollar amount. The difference is the lot size. The difference is in the pip account. Because if you can make consistency in 15 pips every single time, guess what? To get 15 pips in one trade, it's easy. You don't have to be like, oh my God, I gotta discover how I'm gonna get this done, right? You can be a scalper, you can be a swing trader, you can be an intraday trader. Later on, you're gonna have a better plan, a trading plan, right? Because you're gonna discover yourself as a trader. But when we start, don't try to get, oh, I'm gonna get in one trade 100 pips, right? You can if you manage your trades, if you be watching your trades, or if you use the tracking your stop loss, you know what I'm saying? But before you start doing that, if you're just taking signals blindly, make sure you take out in profit. Nobody's gonna tell you, Isabel's not gonna tell you, X ain't gonna tell you, I'm not gonna tell you to get out of the trade if you're in profits, right? Even though it can be very small of the profit, but you already won one trade. You're not losing money. Like every single educator says, it's hard to go broke if you close in profit. You never can go broke if you close your trades in profit. Oh, but I closed in 5 pips in profit. Why did you close in 5 pips? I wasn't feeling very confident. That's okay. You didn't lose any money. At least you're building your mental state like, I didn't lose any money, but I got out in profit, right? Oh, my personal goal is 20 pips in profit, but when I'm in 10, I'll make sure I'm putting break even, right? Yes, responsibility. You got to be responsible. You got to treat trading as your business. Let's say we all selling a product. You're going to make sure you keep track how many products you're selling a day, a week, a month, right? How many of you guys started the week last week on red and then just like, forget about it, this week ain't mine, and that was just Monday, right? Know exactly how many pips you can lose in a day. My thing is, if I lose 3 trades in a row, I'm done for the week. I'm done. Because if I go back all my journals, this is my new one, I know my accuracy is 86%, right? So if I'm making 86% of my trades, I'm winning 86%. If I lose 3 in a row, that means what? That's it. I'm done. I'm not gonna keep going. Why? My mental staying there. I'm tired, mentally tired, right? I'm not seeing my perfect position. I'm not following my discipline. I'm not being disciplined, right? So I just want to show you guys one thing. I think everybody has this, right? This is like a long time ago I have it. We call it compound chart, right? Let me know if you guys can see the screen. Y'all can see the screen? Just say yes. Okay, perfect. So let's say we all started with a small account of $100, right? Don't look at the lot size because this right here ain't gonna protect your account. This is actually over leveraging your account. So forget about the lot size. Let's just cancel. But I want you to use as a profit goal, right? Oh, but I see right here, should I make 5% every trade? No, you should make 5% in every single day. That's your goal, 5%. 5, 10%, it depends on how much you're trading that day and how's the market behaving, right? So if you got $100 in your account and you made that $5, you're done. You're done. Like Isabel just broke down the pip count, the lot sizes. For $5, you only need 50 pips. And if you're doing just what, 10 pips a trade, you just need 5 trades. Or you're doing what, 25 pips a trade, you only need 2 trades a day. If you break down like that, you change your perspective in how many times you're gonna get in the market, because every single time you get in the market, you're risking. No matter what, you're risking. And don't be like, oh, but scared money don't make money. Yeah, don't make money. But you ain't scared because you just press sell. You ain't scared because you just press buy. Don't go by other traders that they over leveraging just because they got in blues and they close their profit with 200, 300, 400, 1,000, $10,000, 100K. This is not a competition. Because I'll tell you what, on a $100 account, if you follow the growth of 5%, right? You can divide that 5% for like 2 days if you don't want to risk that much. Because every time you get in the market, like I said, you're risking. Imagine like within like every single day you make 5%, right? And you divide the profit within the pips and the lot size that you actually are comfortable. You should be almost what? At $430 in the month, right? But of course, we ain't gonna over leverage, because that's not the goal, because we never know when we're gonna hit a stop loss. Okay, so that's what the most important thing is. Hold on a second, Jordan. I know you're tired. All right, hold on. Save the key. Perfect. So what I want to tell you guys is, find yourself a trading plan that can be easily followed every single time you enter the market. Not just because somebody said in the chat, even the educator said in the chat that your take profit can be as much as at 50, 70, 100 pips. Great. If you're mentally ready and you understand what you're looking at the market, you can make that 100 pips a trade. I'm not saying that's impossible, but be sure, like make sure you have the pip goal. I know my son today just lay down right here. Okay, so just have that every single trade. If you're okay with 15, close at 15 pips. If you're okay with 20 pips, close that trade at 20 pips. Don't wait for somebody to tell you, hey, you should close. And if somebody tells you, man, why did you close? We're banking right now. It's okay. You're following your own discipline. It's your trading plan, right? Because homeboy and homegirl ain't gonna trade for you. Because if you lose your account, what happens? Are they going to give their own money for your account? Hell no. Right? You're going to be the bobo and boba looking at the chart, be like, hey, I just lost my whole account just because they saw everybody dropping the standard lot. And you ain't got that much, you know? So don't be that guy. This is not a piss contest. That just because people are sharing the results, you got to make the same results, right? Focusing first, making that little dollar. And then after $1, make $2. And after that $2, within a month of consistency, you're going to see your account growing, right? That's why I tell every single day to every single one, this is a trading platform that educators are teaching you how to be 86 to 90% accuracy. Like every single thing they do, they're accurate. So don't be that guy like, this strategy don't work. The broker's fault. Oh, the broker took me out. Be responsible for your own thing, right? You made a mistake. Everybody makes a mistake, right? How many times I call Isabel saying, I pressed something and it wasn't good. You know, I wasn't looking at the charts. I just entered blindly. I ain't gonna lie to you. This week I took a loss. I was like, oh my goodness, why did I enter? I didn't even check if my confirmation was there, but I was just felt good because I was in the row. I was like, oh, winning. I'm like, okay, let me just go ahead and buy this and that. I didn't like the market, got out, but guess what? That didn't hurt my account. And any loss that you're taking shouldn't hurt your account, because what you're learning is not just make money. You try to make that consistency. The consistency is gonna build your account to grow from 0 to 100. Once you learn how to take profits and be okay with that, there you go. That's the same step you gotta do every single day, every single time you trade, right? And if you're on the hope mode that one day you're gonna make more profits than loss, you're not being rational. You're being super emotional right now because you're hoping that the trades that being sent is gonna hit take profit all the time. But as soon as they hit a stop loss, you get mad and then you post in the chat like, oh, we hit a stop loss. Right? How many times we see that? Like, oh, dang, hit a stop loss. It's okay. On to the next. We're looking at the other trade already. Don't go back to the same pair. And y'all, if you lose on US 30, and I'm sorry, I know I'm going to post it on YouTube, but your S is just for a week in this business. You never traded before. You're putting yourself in a position that you're going to be mentally hurt, right? Even with gold. I'll tell you this right now. I got a situation with gold that I don't look at gold, right? Why? Aline, but you do so good, but why you don't trade gold? It's just because when I was a new trader, that's the only thing I used to trade, gold. And I was like, oh, because it's fast. You can make fast money. I lost a lot of fast accounts. You know what I'm saying? But I want you guys to understand this. Make a trading plan. And if you don't know how to make a trading plan, hit me up. Aline, please break down for me. What should I follow? You know, what should I do in every single trade, right? Break it down like if I enter the trade on Monday, when should I get out, right? Tell me, because I've been doing this for a while. Isabel been doing this for a while. X have been doing this for a while. And guess what? We all follow a trading plan, because if you don't, it's just like trading and trading and trading and trading and trading. And then you're going to go ahead and going to look at your MT4 on Friday. And be like, holy crap, I traded 50 times this week. Oh, that's why I was losing money, because I wasn't keeping track. How many times you looked at your phone and be like, dang, did I trade that much? That was me back in the day. I'm like, dang, I just did almost 100 trades. I wasn't even looking. You know, you get tired. But if you make yourself like, okay, this week, only 20 trades. That's my goal. But we only taking signals. That's fine. You don't need to take all the signals. And let me tell you this. If you're new, right? And they send like a USD JPY, right? And CAD JPY. And we're buying it, both of them, guess what? If one goes wrong, the other goes wrong, because it's basically the same pair. Okay, so don't go ahead and like, oh, I'm gonna risk 5% in this and I'm gonna risk another 5% on that. Good, you just risk 10% of your account, and whatever the outcome is, it can be good and it can be bad. And when it's bad, you just bought 10% of your account, right? And don't go like, oh, US 30, I'm okay because I've been studying it. Great, go ahead, trade US 30. Lost once, lost twice, lost the third time. Are you gonna trade the fourth time US 30? No, don't look at US 30. Like me, when I lose one, when it hits straight SL in one pair, I don't look that pair in the same day. I'm like, not today. Here you go, Isa. Do not trade US 30. And if you are having problems in counting pips, what Isabel did today, take your notes, write it down very clear, and glue that to your wall. How to count pips. Oh, this is 10 pips. Okay, this is minus 10. This is plus 10. I used to do that, and that used to help me a lot in the beginning. Okay, JPY pair is different because the numbers are different. Okay, let me just put on my wall. So every time I look at the chart, I know what's going on, right? Or on your phone, put on your notes or behind your phone or something. But make that plan of how many pips you're looking for, right? Don't look at the dollar amount, because it really doesn't matter, because when you're consistent, that's where you're going to see the real money, the consistent money right there, because it's so repetition to repetition that it's the same thing. Like me, I was talking to Kevin and Ivan the other day, be like, dang, it gets boring because it's the same thing. You see the same thing, you're gonna jump on the same trade, the same exact trade, maybe it's even same pair, right? But have that discipline. Discipline is gonna take you to the account that you're looking for, right? And if you ain't got time, maybe you're a mom like me, like, look, he's sweet, right? It's possible. I'll tell you this, it is possible. If I learn with him on me like this, he's a mama's boy. He's always with me. You guys can do it too. Just gotta follow a plan. And your plan gonna be different than mine, gonna be different than everybody else. But you gotta start looking at it, every single trade, and write it down in your paper. Look at how many pips you're risking. Look how many pips you're looking for. Because you're gonna get on the level that you're gonna see what's quality, what's quantity. Sometimes you be like, I already did my 15 pips trade, I'm okay. Oh, but they're sending hella trades. Just take it. Okay, taking your demo. Demo's gonna build your confidence to be able to copy and paste what you did on demo to your real account. Okay, so that's it. I just want to say, if you guys really need help in writing down a plan that's gonna be matching your mentality, I recommend you guys to look at the if I knew which video was, there's a video from Kevin Serrano, I think that was from last year. He goes over a trading plan. I followed that because I've been following Kevin since back in the day, since last year. And if you guys really need help, like, hey, Aline, can we sit down one-on-one? We don't need to do calls. I ain't gonna post on YouTube, nothing. Call me, text me, Aline, I really need a trading plan. What should I do? Right? Because when I started, I kind of like, Isabel helped me, but I didn't take that serious. So I blew multiple accounts until I like, oh, I gotta have a trading plan because I don't know what I'm doing. So that's how you build consistency, because you need something in front of you telling you how many trades you should take and how many pips you should take, right? Because that's it. You do that every single day, you become 90%, 86% accurate, period. Okay? Does anybody have any questions?
Hi. Yes, I had a question. So for Forex, I know the market is open, not every day. So what happens, for instance, on a Friday when you have a trade open and 5 o'clock rolls around?
All right. So when you actually have a trading, your open trade and the market close on Friday. So what happened is the broker gonna he's gonna freeze where you at the market when it closed, and when it opens, you just gotta wish you have a stop loss set or take profit set, because the price of the pair you're trading, let's say Forex, is gonna be fluctuating through the weekend. It's just your broker ain't working, right? So for all of us that are trading Forex, we cannot place any orders through, like, trading Forex, any orders through the weekend. But when it opens at 5 o'clock p.m. East, you're gonna see maybe a gap. When we say a gap is, let's say your entry price right here, maybe you're like in red, draw down like 10 pips, and you might be 30 pips when it opens negative, right? Or you can be very close to take profit. Or sometimes it opens at the same price. We never know. We can tell you, like, if it's going to be in profit or it's going to be negative. But that's why I tell you every single Friday, I'm like, I'm done trading because I don't like holding trades through the weekend, because I just don't know what's going to happen. Because if news comes out during the weekend and you're trading the pair that you just come out, that news just come out, like, for example, market was very volatile when it happens, the Brexit happened. So GBP pairs and Euro pairs were very volatile. And when all this Corona stuff started happening and everybody was just like looking at what Trump was going to say. So anything that he says during the weekend that can move the market, it will move, right? So that's why every single educator says, do not hold any trades, right, during the weekend. And if you do, make sure you have a stop loss set because it's very risky, okay?
Okay, thank you.
You're welcome. Does anybody have any questions? No? Okay, so make sure you follow me on social media. I'll post it. I'm gonna post this video on YouTube, okay? It is FX Lily and Fam. I'm gonna post this right now whenever we finish. And if you are needing for a trading plan, just let me know. I'm looking forward to do this this whole weekend. I'm gonna write it down exactly what I do. And then if you guys want to just do a one-on-one call, we can do something. Okay, just let me know. Alrighty, so I'm gonna pass back to Isabel. Whatever, Isa, if you want to say anything.
No, you said everything. I appreciate each and everyone for being on this call. Thank you, Aline. Thank you, everybody, for showing up. Looking forward to trade this week coming up with you guys with a better risk management, with a better mentality, actually knowing what you guys are doing. And as Alina said, if you guys want a one-on-one, or if you guys are kind of lost on which educator to follow, which trade to take, just hit us up on social media or on Telegram or on WhatsApp, and we'll be, happy to help you guys out. Have a great night.
One thing is, next week we're gonna have a trade-a-thon, and this trade-a-thon, if you never traded before, it's gonna be almost every single day. All the educators from DeLorean and Vibretta, they're gonna make a schedule, and they basically gonna do trading live sessions like all day, right? So that means it's a great opportunity for you to find a strategy that you might like, but at the same time, if you overtrade, you ain't gonna like the result. So make sure you apply the discipline, and I might be on Trade-a-thon with Kevin. I'm still looking for the time, but I'll let you guys know. I believe it's gonna be Tokyo session, so love it. It's gonna be lit. Alrighty, so have a blessed night. I'm gonna put my baby on his room, his sleep, and then I'll see you guys later. Okay, bye.